Hello, everyone. This is Martin, and welcome back to another weekly review. We're going to be taking a look at the week of November the 28th to the December the 2nd. November 28th is actually my birthday, so looking forward to a great week, meeting up with my family, and probably getting together with everyone on Friday evening. And so that's always good fun. Now, we are on the rocket ship here. You can see that we are rocketing to the planet called Forks, but we're also rocketing toward the holiday Christmas season of December, and that's always a lot of fun as well. So hopefully everyone's having a good time, getting ready for the Christmas holiday season, maybe making plans to get away even during the holidays. So let's get started with this Forex presentation. Let's see what trading opportunities are available for this week. And the theme for this week is U.S. strength could present some good trading opportunities. I believe that it looks like we're getting closer and closer to the U.S. Increasing their interest rate. Perhaps in December, and U.S. Strength is certainly showing on the currency pairs as well. The weakest currency right now is the Japanese yen, but we're going to have a closer look at all of them in just a moment. Okay. Okay, the very first currency pair is the Euro USD daily here in front of us, and you can see from this period on here, price buyers tried to bring it all the way up, completely rejected here, and then down, 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 quite heavily, quite quickly, down to an area of support. So sellers, because of this huge move down, sellers are in control, and you always have to wait for a bounce back. Well, it's something that you have to watch for after a huge sell-off like this. So you're looking for a bounce off support, and then for price to go higher. And the only thing is, how far can price go? There are many different methods. I've drawn this channel. You can see the upper and lower here. Price could certainly come above this resistance, the short-term resistance right here. If it does that, price could certainly go up higher. But my bias is to the downside. Overall, we're in a lower trending market. Um, and we can have a better look at the 4-hour chart. I'm going to switch that to the 4-hour, and you can see we've had a bounce off the resistance. This is the 4-hour chart. Here's the the gray rectangle that I've shown as resistance. So we've had a huge pin bar sell-off. Price may go lower, and my bias is to the lows, to the downside. So if we're looking for an aggressive sell trade, we could sell below 105.80, which is, let me just get the crosshair, 105.80. So right there. So that would be an aggressive. So just below this daily doji, basically here at the bottom of the lower wick. Okay, that's an aggressive sell. More of a conservative sell would be right in this area here. Price goes down to there, then you could be looking at a sell below 105.50. So that's more conservative sell. Here's more aggressive. Price may come down to here though, and if it bounces up, then again you could look toward buying up again. So here, or you can just wait and see, but basically my bias is to the downside. Okay, we are losing momentum. Right here you can see with the MACD indicator. So momentum is falling just a wee bit. Again, price may go sideways, down, and then bounce up. Again, it depends on what type of trader you are. If you're an aggressive trader, you may want to take a sell trade, like I said, just below the 105.80, or just wait and see what happens. Okay, so that's the Euro USD. We're going to take a look here at the LEOD, lazy end of day. Again, you can see this is the daily chart, so there could be a good price reversal right here. Could be good for a counter trend. I mean, price may come back all the way up to this area right here. Okay, so again, you might just want to wait and see. Now we move to the British pound USD daily. Okay, on this chart, you can see the first thing I've done is drawn in a lower and upper trend lines. So this is designates a channel whereby price basically has touched here. We bounced off support, gone higher, reached the top channel here, come back down, gone higher to retest it. So we've made a higher high. And by coming down again, you can see right here, we've made a higher low. So higher low to the previous low right here. And price seems to be bouncing up again. My bias is to the upside, okay? So I believe that price, well, prices, first of all, let's look at price within the last week. The red line here designates the close on last Friday. So you can see after 1, 2, 3, 4, 5 days of last week's trading week, price has really just gone sideways, went up, down, nothing, nothing, up a little bit. So price has gone sideways. We are in kind of a triangle consolidation. But I believe the bulls are gathering enough strength to push price much higher again. And it's just a matter of what level are you looking to get in. Like I said, I'm thinking that price will go higher. The British pound has actually surprised a lot of people after the Brexit vote. I mean, a lot of things would think that, would have thought that the British economy would have fallen apart. But in fact, it's gotten stronger, stronger, and stronger. There's some good economic news coming out from Britain as well. So I believe this is the one currency pair that, against the US here, could muster enough strength to go higher again. How high? Possibly just up to this channel once it breaks this resistance right here. So again, you could look at a buy. Well, first of all, what I would do is wait for price to come back lower to the bottom channel right here, and in a pullback, and then with evidence buy above 124.50. So price pulling back and then up higher, price. So buying above 124.50, or just waiting right here above this. Waiting for price to break out above this resistance area, and you're looking at above 125.20. Okay. And really quickly, the AUDUSD, you can see sideways between the upper and lower yellow lines. We need price to move higher above the moving average. That's the 50 right here. I put that in on the AUDUSD chart. That may help some people as well. So ordinarily, we wait for price to break above the upper yellow line. Then we would look at going long. Okay, and but in this case, we want to wait until it goes up a little bit higher. Okay, momentum to the downside has weakened tremendously, so momentum seems to be shifting to the upside. Now we are going to go to the Australian USD. Okay, here we have another example of a pair that has been trending lower. So the overall trend is down, and we are just in a massive pullback. And the big question is the pullback ending shortly? Will it go just a wee bit higher? Or will the pullback bounce off this long-term trend line? You can see here, price has been coming down, okay, and I'm just going to use a little pen here. Once you see price come down like this, the sellers are completely in control, completely. Now we're just in a small pullback, and the idea is we can look for evidence right about here and then catch price as it's coming back down again. So down, up, pullback, that's what we mean by pullback or retracement, higher, okay, and then down again. Right now, momentum has shifted to the upside, okay, and it's just a matter of waiting for the evidence to form. I mean, if price breaks above here, I've got this arrow. You can see if price breaks above this line, price may go back all the way up to this major key resistance area. Then you can watch for price to come back lower. Okay, let me just squeeze that chart down a bit so you can see the lower trend line, upper trend line. So price really has been in a major channel. Okay, down, up, down, up, down, up. It's retested, the upper line of the channel. It's retested the bottom of the channel, but price finally broke out, meaning sellers are completely in control. Even though prices is in a pullback, sellers are still in control. Just understand that this is just a pullback, okay? Correction in price. So here we had a huge impulsive move down. Here we have smaller candles up. So this is a corrective move in the pullback. And again, it's this area we want to look at for price to come back down again, or watch if price goes higher. Okay, this currency pair is obviously tied to gold. We had huge sell-off in the AUDUSD. The price of gold has come down quite a bit, and we're going to take a look at that right now. Okay, here is gold for there you go. There's the gold daily. You can see it correlates completely, right? Correlates completely with the previous Australian USD daily. Here's the Australian USD. You can see that right here. Complete control by the sellers, and then we get to gold. Sellers again in control. So there's a bit of a sideways movement here, halting the gold from going down lower. But I believe my bias is to the downside. Gold has ways to go down, and where to? Right above this area, which so this key support would be around 1124, 1124. Okay. So if price continues going down, it'll come down to about 1124. Okay, so now we move to New Zealand USD, and with this one, my bias is short-term higher. The New Zealand economy has gotten a bit stronger as well. There's good economic news coming out of New Zealand, and we had a huge, you can see reversal right here. So, price had come down and it's reversed higher. Okay, you can see that right here. So we had a doji. Doji off does not necessarily mean reversal. Doji means the buyers and sellers are resting. Usually after a huge down move, sellers the doji would mean that the selling the bearish move would continue to the downside, but in this case, there was a surprise move higher. So in the short term, I believe price is going to go higher. Okay, it could retest this trend line. Where do we get this trend line? Okay, let me just zoom out just a wee bit. Okay, there you go. You can see here, here's a trend line. However, we broke the trend line to the downside, sellers in control. So we're kind of going sideways right here. I can zoom that in again. So sideways, sideways, sideways. See up, down, up. And again, this is the key area right here to watch. Will price go higher, or again, with evidence, watch and take a sell trade to the downside, or just wait altogether and wait for price to come below this area right here. So you could sell below 0.7026. So let's take a crosshair. Sell below 0.7026. Let me just zoom that. Let me go to the 4-hour chart. Okay, let me go to the 4-hour chart so we can zoom that in. Okay. Okay, so I'm basically saying an aggressive sell would be right about there, 0.70 26. Okay, right about there. And if price comes down below that, you've got another 37, 40 pips to go before it retests the bottom here once more. So that would be an aggressive sell for short term. However, certainly you could wait for price uh, to go higher, and could take an aggressive buy trade above 70.65, which is right above there. So let's take the crosshair again. 70.60, yeah, 70.65, right about there. 70.65 for an aggressive buy trade. Just for the fact that we are in a buyer's market right here. You can see that right here. Momentum is to the upside, And on the daily, you can see we have one little green um, histobar. We've had a crossover right here. You can see the MACD has crossed over the signal line. So usually when that happens, it's good for 1, 2, 3 bars higher, okay, before it retests like a previous resistance area. Okay, so again, my bias is to the upside. On the New Zealand USD, you can see price has closed above the 200. Again, I think price could go up a little bit higher. Okay, now we get to the US CAD, and basically price has gone sideways. However, we've come out of this triangle. Let me just, this is the daily chart. Oh, yeah, I'm sorry. There we go. This is the daily chart. You can see we were in let me do something there. Okay, there's the triangle on the daily, on the 4 hour. You can see that a lot more clearly. Oh, we've kind of like we're trying to break out of the triangle right here on the short term. So my bias is actually to the upside just for well, two reasons. One, the US currency is the stronger currency of the two. The Canadian dollar obviously is tied into gold. We'll look at that in a second. Gold has been dropping quite a bit as well, so it's losing steam. Not gold, I'm sorry, oil. Okay, I'm sorry if I mentioned gold. My mind's still on the Australian currency for whatever reason. So the Canadian currency is tied directly into the commodity sector, which oil is the biggest commodity for the Canadian dollar, and the way the oil rises or falls is the way the strength or the weakness in the Canadian dollar goes. So right now, oil is weak, Canadian dollar is weak, and the U.S. dollar is stronger. That's why this currency is propelling higher. You can see this big area of sideways motion. So if you want to look at it, I'll draw something right here. What has happened is here is a huge area of support. Okay, so we had a huge move up. Okay, we're in a buyer's market, and we're trending higher, but then all of a sudden we went sideways, and again we bounced off this major key support area for a while now. I believe price is going to go higher. Okay, and what you want to do is you can wait if you want and buy above 135.38. So let's take the crosshair, 135.38. So you're looking right about there. Price goes above there, 135.38. You can take a buy trade, and then we've got a ways to go to the upside. Okay. Now, I've also switched the chart to the LEOD, or the lazy end of day, for those people that don't really know this chart. The way this works is once price breaks out above a upper or lower yellow line, price most likely will go higher. One of the conditions is that the price breaks a down trend line. In this case, it actually didn't. So take a look. Price may just go up to there. So we're kind of still in this consolidation phase. There is resistance joining the wick high here, the wick here, but in the short term, price could certainly go higher, and my bias is to the upside as well. The momentum, take a look below. Momentum to the downside has completely weakened. The MACD is above zero, so we are in a buyer's market, and the wind or the momentum is starting to shift to the upside. Okay, but again, you might want to wait and see. And now for the next currency pair, we're going to go. Oh, before we do that, there's oil. I just want to show you really quickly. Remember, the Canadian dollar is tied to oil, so oil has gone sideways for, well, all this week. This red line designates the end of the previous Friday. We had one good up day, then a a heavy bounce by the sellers here. Nothing day, just um, going on for the next couple of days. Then a huge sell-off on the last day, which was Friday of this week. So I believe price is certainly going to be going lower. Price going is if it's going lower, that's going to weaken the Canadian currency, and you can certainly see that the momentum is rolling over. We are losing complete steam to the upside, and momentum is shifting to the downside. Okay, now we move to U.S. Swiss franc, and this is an interesting currency along with the Japanese yen. Here, the U.S. is definitely showing its strength. You can see this huge upper movement. I mean, take a look at that. I mean, from about here, break of a trend line, we've gone up 327 pips. Okay, now just to show you here, real quick recap. You see, price has gone higher. So here, buyers are in control after this kind of sideways market. Buyers are in control. Okay, and this is big money coming in. Okay, here, right here, with these two candles, that is big money coming in. Okay, and when I say big money, we're talking about bankers and large institutions, things like that. Price then consolidates, and then big money pushes prices higher again to a high, bounces back down again. And take a look for a second here as price coming down and going back up again. You could have drawn a trend line. This I've taught in the course. This is called a swing, simple swing pullback. So price goes up, wait for the pullback, then wait for evidence to the upside to get in, drawn in. Actually, the trend line the trend line is about there. We're joining. You see, we're joining this high, this wick high. Okay, we just need 2 points to draw a trend line. That's good enough. You could have done something like that again, but this candle here, look at this. This is from a news event, obviously, but price went all the way down, and buyers brought back price all the way up. I mean, that's a huge, massive swing on one day. Um, and that might have been, was that the election day? I think it was. But anyways, so again, big money coming in, propelling price way up high, all the way up, and now we're in a pullback. So the idea is you want to wait for the pullback to end and then buy in the dip. So once price comes back to here, then you want to consider buying here once price comes down here, or waiting for price to go higher above here. So it's your call because everyone's entry is different. Everyone has different entry criteria based on their trading personality. If you're an aggressive trader, you would wait for price to come back here and pull the trigger for a buy, okay, with a small stop loss just below this gray rectangle. If you are a conservative trader, you want to wait for price to come around and look for evidence to the upside like that, and then get in right about there. So there's a difference in the two styles of trading. It just depends on what's comfortable for you. Okay, so that's that. And what you want to do is watch the 10100 level for major, that should hold as a key support. Price bounces off of that. Okay, let me just take a look. There we go, right there. So that's basically this where this gray rectangle is drawn. That's kind of key support. I mean, price breaks this, and then it's going to go to the downside to this area right here, where you can again look at a buying opportunity. But if price comes down, moves to the upside, then that would be a good place to get in. Okay, and the final, there's our LEOD, so you can see prices in a pullback. Let's just go to the 4 hour. Okay, so 4 hour, if price comes below, and this is really key, if price closes or goes below this 50 moving average here, you can look at price coming back all the way to at least here. Here's the open space. So we're looking on the downside for a counter trend move, at least 140, 50 pips to the downside. Okay. And finally, the USJP, very similar to very similar to the US Swiss franc. Price has just gone up like crazy. This one's a great pair to trade just for the fact that, I mean, we had a move of 929 pips. That's pretty awesome, okay? And what you want to do is be very cautious now. Yes, my bias is still to the upside. We are in a higher trending market, but caution, everyone. And I mean that sincerely because I would probably at this point in time, see, we had a doji on the Friday. I would wait for price to come back down before getting in. You want to take a look at a 4-hour chart to get a better bird's eye view as to what's going on. See, we had a bounce off the top, but again, it seems like we're bouncing off this support here. Let me just really quickly zoom in, okay? I've drawn in the support. You can see that right here. So we've had a bounce up on Thursday, a doji. Usually a doji after a bounce off the support could mean that the up trend could continue. You could for an aggressive, well, for yeah, I mean, whether you're aggressive or conservative at this point in time, it almost doesn't really matter. If you want to try taking a trade right above here, you've still got a long way to go. This pair on average right now is good for a daily move of about 130 pips or more. So every day this pair moves up quite a bit. So in one day, I mean, if it goes up higher, it could go up all the way up to this area with the gray rectangle, okay? The conservative trader, for sure, if you're conservative, you want to wait till price clears this high here. And for a conservative trader, you want to buy above 113. Let me just take a look here. At least, well, we're looking at in this case, 114.20, okay? 114.10, 114.20. If you're very conservative, but again, now you're taking a trade that's far away from where you should be putting your stop. So you would have to trade with very small lot size. But here, if you are aggressive trader, I would wait for again for a pullback and just take a buy trade because your stop loss would be very short, like just below here, or pull back and then wait for evidence and then get in. Okay, but or even right above here, you see this candle, this white candle. So you might want to, you could possibly consider a trade above 113.33. Let's just take a look. Yeah, 113.33, right above here. That would be again, I would say fairly aggressive, but if trade goes your way, immediately you would make in the short term at least 50 pips. If it's a good, strong trending candle or a couple of candles all the way up to here again. Okay, right now the momentum is starting to shift again to the upside. We are in a buyer's market. This is the 4-hour chart. Daily chart, have a quick look. You can see the MACD is well above zero. We've still got momentum to the upside. However, momentum is decreasing a bit just because we've had the doji, and again, I would have to caution you, price may fall back to at least this area. So again, just depends on what type of trader you are, how much patience you have. So that's it for this week. Good luck, everyone, and I will see a lot of you on Tuesday at the next monthly meeting. And take care, everyone. Happy trading. We'll talk to you again soon. Bye for now.